What's good, everybody? Today is August 27th, and I'm a tad bit sick right now, but low-key, I think we can still dissect some price action. So without further ado, let's just hop straight into it, how the day developed, the setup of today, and why I didn't take it. So without further ado, let's just go. All right, so hopping on, we'll start with the tab at a top down, right? So going into market open, we opened the market at about right here, 9 a.m. Yeah, so right here. At this point right here, we have 3 overlapping draws on liquidity, right? So we opened the market and we're looking pretty bullish. Just zooming out to the higher time frame, right? We had displaced through, validating this bigger model, and now we've created this smaller model right here, and then we displaced higher, not yet hitting the top of it, but we validated us to that top of that model, right? So that pretty much tells us, okay, we have 3 overlapping draws on liquidity. We want to look at where the market is right now and see if it confirms us to start pushing higher when New York opens, right? So we open the market on a 15-minute time frame. We open the market within around equilibrium of a range here, and as well we have that big 1 hour value gap just perfectly sitting there, looking like that was exactly where price wanted to retrace to, right? So now drawing that same fair value gap in on NQ wasn't as clean, so we'll just mark this order block instead, right? Price still reacts off the same point. So now moving lower, we see market open, right? And keep in mind that bigger time frame condition, right? We have this bigger time frame overlapping draw liquidity, and then past that, we have this bigger time frame overlapping draw liquidity. We're trading 3, even 4 to 5 models today, so I'll show you guys exactly how we go, right? So first of all, we have this bigger time frame model right here. This becomes one model, so I'll quickly draw in that curve, right? The biggest lesson from today, in my opinion, is those overlapping models, right? So this is going to be our model. And then if we zoom lower, we have this model right here. So drawing in that curve, we have from this high, retrace to that fair value gap, go ahead, push higher up to that draw liquidity up there. And then as well, zooming even lower, we have the exact same thing, but right here, where we have retrace that draw liquidity, generated liquidity all the way up here. Retrace that for value gap, and then we draw on that curve right here to boom to the low, and then displacement back higher up to that high, right? So this becomes our third model. Now zoom lower and let's look exactly what happened on open, right? So I just explained the bias, right? When I come into the day and I want to find a bias, the biggest thing that I look for is where in the current market maker model are we, right? Usually we're going to be within some kind of bigger time frame range, and when we're within a range, we're usually in some kind of model, right? So unless we're at all-time highs and we're just making a straight uptrend, there's going to be some kind of higher time frame drawn liquidity, which gives us a model, right? And that's what I want to base my bias off of, right? So we have 3 overlapping models, right, coming into the day. Zooming in, what happens, right? So 9 a.m. starts to sell off, right? Pre-market, we see 9:30 or 9 a.m. right here. We had some bit of news. It was pretty much just big manipulation. Like really nothing dropped at 9 a.m., but we had a ton of news for some reason, or a ton of movement, right? So now looking at this, 9 a.m. opens, nothing. 9:30 opens. Now, right at 9:30 is when we start to see a turnaround, right? So within this fair value gap, we go ahead and we put in an SMT, right? So 2 things we like to see. We see SMT, we're within our fair value gap. That's pretty clean to me, in my opinion. Why is price not locking on, bro? This thing needs to lock in. All right, so SMT placed in right here. And then if we zoom out even further, right, we can look that we have another SMT placed in on this internal low right here. So we have external and now internal SMT, right? Now, the simple way to trade this, the simplest way to trade this is to trade the stronger asset and take the 1-minute model, right? And if you look, that would have not ended up getting tapped, right? We want to wait for that displacement higher, and then we want to wait for that change of state entry. If you wanted to enter on that fair value gap right here, that would have been fine. You would have got tapped for a super efficient move to the upside, but that's the easiest and most simple way to trade this, right? Now, what did I do? I didn't like that way to trade this, so why did I do things differently? Let's go ahead and take a look. If we check this out, we have SMT placed in on this level right here. So drawing this in, this is pretty much equal lows. So it's not really the most important thing to check out, but it is still pretty important, right? Actually, my bad. No, this is drawn differently right here. This is where you see our SMT, right? So SMT gets placed in right here. My bad. Oh my gosh. SMT is right here. Holy, my bad, boys. This is what being sick does to y'all, bro. So SMT gets placed in right here after market open. So that's why if you would have gone ahead and taken longs at NQ, right here, there was really no change in the state, so it wouldn't be valid. You probably wouldn't have ended up hopping in the trade unless you forced it. So that would have been protection. You wouldn't have ended up gotten stopped out, right? If you took the trade on ES, though, you would have seen the efficient move to the upside. If you would have waited on NQ, you would have seen it equally, I mean, probably a little bit less efficient move if you trade the 1-minute model. So what did I end up doing? I wait. And keep in mind, I didn't trade today because I woke up late. And when you wake up late, it's not best to go on and force and look for the trade and be like, what's happening right now, and try to figure out the bias in a minute, because you open yourself up to more possibility of taking a trade that's not high quality. So I'm literally just removing myself from the possibility of entering a trade in those conditions, right? Those bad conditions, I want to remove myself from the possibility. Literally, I just didn't check the charts until I got to school, so around 7:30, right? So it was really no entry or no anything for me to check out here, and because of that, it was peaceful. It was a good day, right? Then I'm completely fine missing this setup, and I'll show you guys why. So zooming out, right? Checking out the 5-minute time frame was my favorite for this, right? We see this model play out, right? So 5-minute time frame, we end up displacing right here on open. We make change in the state at this level right here. So I'll quickly mark this. Boom, boom, change in the state. This now becomes our change, right? Now we go ahead and we place in equal highs right here. So pretty much relative equal highs right here. This becomes a point which we see definitely a ton of liquidity, and we want to go take that as our bigger time frame take profit, or as our external, a little piece of our external model, right? So now looking here at this same exact point, where we make that change in the state on NQ, we just see, or on ES, we may see a tiny move on NQ, right? And that's when we make this SMT. So at this point, if NQ was completely aligned, this would be, and there's no SMT here, this would be the internal model, right? I would zoom in and I would go ahead and look to take the 30-second or the 15-second model, whichever is cleaner. And I think on here, the 30-second was a little bit cleaner. So yeah, if we check 30-second looks cleaner, we see displacement changing the state right about here, tapped at that level after invalidating all this order flow and still leaving that bigger time frame draw up there, right? So change the state right here, entry stop at that low, and then we go ahead and we leave runners for first take profit and then all the way to external take profit. So we're around a 4.1 RR today. That would have been a pretty solid trade, right? And if you look, pretty much no drawdown, super efficient move to the upside. This is the kind of stuff that we want to be looking to trade, right? And it's important to make sure that in these conditions, we understand, like, what did that SMT tell us, right? So that's the thing I want to get into. What did that SMT tell us? If we zoom out and we check out that SMT, that tells me that at this point we have SMT, right? The market shouldn't go any lower. So now if I see the model, it's pretty much equivalent to trading the 1-minute model, right? Although now I have the overlapping model, so my trade will be higher probability, but I have the SMT. So my question then becomes, what time frame is the model actually on, right? That's the biggest thing for me. What time frame is the model actually on? And I can figure that out by just simply looking at structure, right? 15-second had a pretty clean model if we check that out. It was a little bit too noisy, right? And that's why I'm most likely wanting to stick to the highest time frame I possibly can where I see the model play out. And if you look, yeah, change of state would have been on this level. You wouldn't have gotten tapped if you waited for any kind of displacement. Take change of state right here, you get tapped, anything like that, right? But 30 seconds to me was the simplest, and it gave me a pretty great RR. 1 minute was just way too simple, and it didn't show the structure I needed. So that's why I didn't take the trade in the 1 minute. So I waited for that 30-second model to be validated. Now I have that SMT that's extra adding to my bias, and this becomes my bread and butter setup. Bread and butter setup, right? Why do we reject in this area? We have SMT, we have fair value gap. That is everything the market needs to do, and also time and price to become aligned, because right when we opened the market at 9:30, price is an area in which we expect it to reject, making that SMT, giving us another sign in which we expect that to reject. And finally, time is aligned because 9:30 open, right? That's when we see an injection of volatility towards the existing draw liquidity. We see manipulation, all our ICT stuff that we like to look out for. That's when we see all that happen, right at 9:30, right? So now time, 9:30, and price structure right here are aligned, right? We're at EQ of this bigger time frame range right here, I believe. So pretty much right near equilibrium, looks good, right? And then, like we said, we saw that, right? This is my bread and butter setup. I want to see a 5-minute or a 15-minute change in the state, and then I want to trade the 15-minute model, but I want to take the internal model and leave it for runners, right? And that's why when we take times in early in the morning, when we expect price to be very efficient, that's why we can get these really clean, high probability, high R setups, right? 4R within pretty much 20 minutes, right? Like, that's the kind of stuff that we want to see. And as well, the biggest thing that told me this trade was super high probability, and what you honestly could have done is you could have been leaving this for this bigger time frame drawn liquidity. And that's what tells me. That's why this trade is so high probability, because there's 3 overlapping draws in liquidity here. There's number 1, this super bigger time frame has this drawn liquidity right here. This model has this drawn liquidity this high, which is confluenced by that overlapping drawn liquidity. And then finally, we see this small internal model today that has this drawn liquidity. And then finally, even past that, like, you know, we like to zoom and be snipers. I'm a market sniper. I'm not just trading and saying, all let it play around, but eventually trade it and take profit. No, I want to be that market sniper, right? So that's why I'm zooming in and I'm looking for this 4th model right here. Why do we expect this to reject? Right here, we come back, we tap the change in the state. We have generated liquidity at these highs. We're back in equilibrium with this range right here. We're probably tapping into some kind of fair value gap right here. And we also, all that on top, we also have that SMT, right? So it shows me we have a ton of things that tell us, all right, yeah, this is an area which we definitely can go ahead and expect to reject, right? That's why this for me was so high probability of a trade if you would have taken this, right? I really like this trade setup today. The only thing I wish is that we had more news today, and hopefully tomorrow we'll get some really clean action, because it's pretty much the first day of the week with a little bit of actual meaningful red folder news, right? So we should hopefully see some really great trade setups. And once again, if you guys didn't spot this trade, you'd have conviction, you didn't want to take it, whatever it ends up being, don't worry, because this day, for me, I didn't take the trade. I watched it play out and I was like, nice. Because I didn't care. I didn't care, bro, I could have made all that money. Oh my gosh. No, I cared that the thing I cared about was that I was able to build and add on to my already existing high level of conviction in my model, right? When I simply let the market do its thing and I wait for the perfect time to strike, and I'm that market sniper. I wait until everything's aligned and then I shoot, right? That is how we get trades like this. Another thing, you guys think in terms of win rate. You think in terms of I have a 70% win rate. My model has this win rate. I execute on my model. All that's great. And that's what you really should be doing. However, confluence that with this thought. It is pretty much impossible to get a 100% win rate, but we can get pretty damn close to it, right? We can get very close to it if we literally just add on a huge condition filter and we only trade when everything is aligned, when price is looking efficient, when we see SMT, when we see conditions, when we see all this stuff, right? When we have all those extra things, we can get pretty close to a 90 to 95% win rate. And that's very possible. But once again, that decreases your trade frequency. Don't expect to see these A+++ setups every single day, right? This stuff comes maybe once, maybe twice a week. That's why I only take 1 trade a day max, 3 trades a week max. If I take 3 trades a week, however the trade's played out, whatever the outcome is, I am not going to trade anymore, and that's it. That's how you guys have to act, and that's why we can get these efficient sniper trades. I mean, look at this, right? How long was this? This was 9:56 to 10:19, bro. That was like what, 25 minutes, bro, and we hit draw on liquidity. And then as well, if you wanted to leave this for this external draw, I mean, right here we see this play out. And as well, there's a short setup pretty much right here, right? We had SMT at these highs. Look, this hasn't taken the high yet. And then we go ahead and we see a dump back to a rebalance to the range to run all of this generated liquidity, this low and this low right here. The market does not stop giving, but it's our job to identify the highest probability setups, right? And then as well, once again, bro, this model is so OP. We could have left for this for maybe even this draw. And if you look, we would have got stopped out. So wouldn't have played, but you could have gotten pretty far in here, right? And the way that I really, if it's up to me, the way I like to leave runners is 2 things. I like to take standard deviation levels and align those with that draw liquidity, right? So this model right here, this whole one, right? I want to take the standard deviation of this model, right? So for me, that would be about right here, because if we look at NQ, we have an SMT at that level, right? So we see SMT making the low at, where is it at? Right here, this makes a lower low, so that becomes our true manipulation leg, right? Marking that out, we see -2 at the top of this high. So right when we tap pretty much into -2, we go ahead and start pushing back to equilibrium. That's when we can expect to see -2 to 2.5 become our target, and then 3.5 as well. If you look right in this range is where price starts to consolidate. And then finally, the second thing I like to do is mark out the internal model, the first internal model, the first accumulation, whatever you like to call it. I like to mark out that standard deviation too, and then I do a little bit of wizardry. I see where do these levels align, right? If we look, our -2 levels are pretty well aligned, and if you look, that's why, right, at -2 we see a rejection, because our -2 levels are very aligned. If you look as well, we have our -4 and 3.5 levels are perfectly aligned with, number one, this draw on liquidity, and then also this one over here, right? Now, zooming in further out, we could take some kind of more standard deviation and then look for this drawn liquidity to get hit. But at that point, we're drawing too many lines in our chart when we don't really know what to look at. In my opinion, this would have been, I would have either taken my full take profit off at -4 and literally top tick that move, or I would have looked for this drawn liquidity. And if you look, the RR is very high here. You only leave a small percent of your trade to run, and this is very high probability. Like I'm telling you guys, if you wait for this to play out, and just backtesting this on FX replay isn't going to give you much results, because number one, those aren't even futures, and as well, you are giving a whole day of price action that you usually give 2 hours in the morning. You're giving that 10 minutes to dissect, right? That's why we want to be so conscious with this, right? And if you go ahead and you do a little bit of games and you get some results, great. Now I want you to go in live market and actually apply this stuff. This is crazy overlapping market maker model game. This is how we can get these crazy efficient setups like this. So I mean, I think that's really all we have to cover for today. Hopefully just mind the conditions, even if you didn't take this setup because of conditions or you didn't have confidence in the actual setup itself. I think overall it's a great trade. However you did it, I think it's great. So thank you guys for listening, and hopefully you guys have a great trading day today. If not, you have any questions, any comments, concerns, anything like that, just go ahead and drop them in the comments. I'll be the first to respond. So without further ado, I'm gonna let you boys go. So thank you all for listening, and peace out.